Welcome to the special episode of how to handle huge gap up or gap down. Recent days, due to war between Ukraine and Russia, most of the time the market opens with a huge gap up or huge gap down. If any positive news came from that war, the market opens in gap up. If any negative news came from Russia-Ukraine war, the market opens with gap down. Most of the people don't know how to handle this kind of gap up and gap down. Today I am going to explain with some of the chart how to handle huge gap up and gap down, how to protect your capital, how to make profit with gap up and gap down. This video is for only intraday trader. It will not suit for positional and investor. Let us move to the chart and first understand what is gap down and gap up. First, let us understand what is gap down or gap up. On 16th March, market closes somewhere around 16,977. On 17th March, market opened around 17,200. This is called gap up. The gap between previous day close and current day opening is called gap up or gap down. If it's open in downside, it is called gap down. If it is open in upside, it is called gap up. To manage this kind of gap up and gap down, there are so many points to discuss. Let us discuss one by one. The first point is identifying the gap up points. That means before market opens, around 9 a.m. or 8:30 a.m., you must know where the market going to open. Then the second question comes, how to identify the gap up points. It is very simple. Just check SGS Nifty and Nifty future in any stock market related website. For example, investing.com and sgsnifty.org. If SGS Nifty trading 300 point plus from our previous day close, then our market going to open in 300 point gap up. If FCS Nifty trading 300 point minus from our previous day close, then our market going to open in gap down in minus 300 points. In that way, you can determine the gap up points approximately. It may change in the pre-market, but it will show the trend, whether the market going to open in gap up or gap down or in the flat condition. After identifying gap up or gap down points, we need to check how the US and Europe market close as well as how the Asian market are trading. Especially we need to identify how many percentage it was down or up. It is more important. Why I am saying it is more important? If US and Europe market closes 3% down, when our market open with 3% down, then the entire effect of US and Europe market already factored in, so no more potential to move further. So market can reverse at any time. We need to be cautious. Now you can understand clearly, if US market closes 5% down or up, our market open with 3% gap down or gap up, then our market have a potential to move another 2%. That means US market is down by 5%, our market opens with 3% gap down, then our market have another 2% to move. I have a two strategy for gap up and gap down. According to US and Europe market close, we can discuss one by one. Before that, we need to mark some other pivot points in the chart. Once we mark the pivot points in the chart, and then we come to the strategy. After that, we need to mark support and resistance in the chart manually, or else if you are using TradingView, you enabled CPR indicator, the support and resistance has been enabled automatically. Don't need to calculate manually and don't need to mark manually. It will enable automatically. So if you are not using TradingView, kindly watch my pre-market every day. There I am saying where is the support and resistance in everyday morning. For 8 moving average strategy, I have some other point. Kindly watch carefully. US market down or up by 5%. Our market gap up or gap down 3%. So more potential to move. Now in this condition, now we move on to the chart and we can explain it clearly. On 17th March, that means last Thursday, market opens with a huge gap up. That means our previous day close was 16,970 and market opens around 17,200. If you are enter at the first candle close and you keep the stop loss at candle low, your stop loss has been taken easily. Here you can see clearly, if you enter at the first candle close and keep the stop loss just below the candle, your stop loss has been taken easily. This is a wrong way to enter. Even though the market have a potential to move further, don't enter at the first candle or second candle or third candle. Wait the market to touch 8 moving average. That means the market opens with gap up and wait till market touches 8 moving average. Whenever the market touches 8 moving average, you can enter. Here the right location to enter and keep your target at next pivot and your stop loss must be in 20 moving average. If market touches 20 moving average, you need to close your position. I am repeating, if market opens with a huge gap up, don't enter a first, second or third candle or fourth candle. Wait market to touch 8 moving average. Whenever market touches 8 moving average and bounce back, the enter at the candle. Keep your target at next pivot. Your stop loss must be in 20 moving average. Whenever market touches 20 moving average, you need to close your position. This is how we need to approach gap up or gap down with higher potential to move. That means US market closes 5% down or up, our market opens with 3% gap up or gap down. Clearly remind the point, there is more potential to move, then you can apply this strategy. It will not work in all conditions. The next strategy I am going to explain, it is called gap up or gap down rejection. The main point in gap up and gap down rejection is, if US market closes 5% down or up, our market open with gap up or gap down 5% and there is no more potential to move, it will work more than the 8 moving average. That means it has higher probability. Many of time gap up and gap down has been rejected by the market. It has higher probability. If you know this strategy, you can make more money in the market. 4th March is best example for gap down rejection. Before that, kindly remind what are all the things you know before the market opens. You know where the market going to open. You know where is the support and where is the resistance placed and where is the turning point of the market has been placed. And one more thing, you know comparison between previous day US market close and our current day market open. After knowing all the things, those who are watching my video first time, first I will explain my chart, then only you can understand clearly what I am trying to say. This is Nifty chart in trading view. I am always using 5 minutes time frame. I have a 5 indicators in my chart. The first one is CPR, which contains center pivot, top CPR and bottom CPR in white, as well as R1, R2, R3 in green, as well as previous day high in green, S1, S2, S3 in red, previous day low in red. After that I am using 4 moving average. The first one was 8 moving average, which is in green. Second one was 20 moving average, which is in blue. Third one was 50 moving average, which is in yellow. Fourth one was 200 moving average, which is in magenta. Here I am hiding 50 moving average for some other reason. I will enable later. Now move on to the point. After knowing everything, you know that market going to reverse anytime, so you need to wait for the right location. This is the right location. When the market took support at previous week low and print a bullish hammer candle. This is bullish hammer candle. When market took support at previous week low and print a bullish hammer candle, you can enter at this candle close and keep your stop loss just below the candle. You can book a profit at S1. That means next pivot. Here you can buy a call option or sell a put option and book your profit at S1. Now we move on to some other example how gap up or gap down rejection works. This is perfect example for gap up rejection. On 3rd March, market opens with huge gap up. Whenever market faces resistance at R1 and closes in red candle, you can enter at this candle close and keep your stop loss just above the candle, and your target must be in next pivot or anywhere in the moving average. You can close at 50 moving average, or else you can trail up to center pivot. We seen the 4th March already. We seen 4th March already. Now we move on to the 7th March. Now we move on to the 7th March. 7th March is also the best example for gap down rejection. Market opens with a huge gap up. It has been rejected exactly at S2. Whenever market took support at S2 and form a big green candle like this, you can enter at this candle close. You can buy a call option and book your profit at S1. In between there is a big red candle. It was a false candle. On 7th March, NSE has an issue with the server, so the candle was false candle, except that there was a clear gap down rejection when market opens with gap down and came down and exactly took support at green candle and bounced back and faced resistance at S2 and came down. If you are using gap down rejection pattern, you can book a profit at 2 times, here and here. 28th February is also great example for gap down rejection. Market opens with huge gap down and it took support exactly at S2. It took support and form a bullish hammer. Whenever you see candle like this, you can enter at this candle close and keep the stop loss just below the candle. You can book your profit S1, or you can trail up to center pivot. This is how gap down or gap up rejection has been work. It has highest probability. Whenever market opens with gap up or gap down, be careful. Don't enter at first or second or third candle. Wait for the confirmation and then take position. Definitely you will end up with a good profit.